Welcome to Cognito Key. Today, we're going to pull back the curtain on a 500-year-old secret, one that basically holds up our entire modern economy. It's the invisible system that keeps global finance honest. Have you ever stopped to wonder, really wonder, how any business, from your local corner shop to a massive corporation, manages to track every single rupee that comes in and goes out? How do they make sure not even one paisa just vanishes? Well, you might be thinking it's some fancy new age software or a super complex algorithm, right? Nope. The answer is actually a beautifully simple and incredibly powerful idea from way back in the year 1494. And that brilliant idea, well, it's all about one single concept: achieving a perfect, unshakable balance. This idea is called the double entry system. At its heart, the rule is pretty straightforward. For every single financial transaction, it has to have equal and opposite effects in at least two different accounts. Nothing ever just gets written down once. A great way to think about it is like Newton's third law of motion. In physics, right, every action has an equal and opposite reaction. Well, it turns out the exact same thing is true for accounting. For every financial action, there has to be an equal and opposite reaction recorded somewhere else in the books. It's like a law of financial nature. Okay, so this whole balance thing sounds good in theory, but how does it actually work in practice? It all comes down to a simple two-sided rule that uses two little words you've probably heard a million times: debits and credits. But before we get into what debits and credits actually are, let's give some credit where it's due. The man we can thank for all this is Luca Pacioli, an Italian mathematician who first wrote all this down in 1494. And what's just incredible is that his fundamental method is still the global standard for accounting today. That's some serious staying power. The whole system stands on this one simple, unbreakable equation: assets equal capital plus liabilities. I want you to picture a weighing scale. On one side, you have everything a company owns, its assets. That has to be perfectly balanced by what it owes to others, its liabilities, plus what the owners have invested, the capital. This equation must always be true, no exceptions. So this brings us to how it works. Every transaction has a giver and a receiver. The account that gives something away is credited. The account that receives something is debited. Simple as that, right? Debit and credit, that is the two-sided rule in action. Okay, that's enough theory. How does this look in the real world? Let's just walk through a really simple example to make it all crystal clear. So let's say your company buys a new laptop for 70,000 rupees in cash. Here's the two-sided effect. First, the giver. The cash account gives away 70,000 rupees, so we credit the cash account. At the exact same time, there's the receiver. The company receives a laptop, which is an asset, so we debit the asset account by 70,000. See? One thing went out, another came in. And just like that, the books stay perfectly balanced. Of course, no system is absolutely perfect. While this one provides amazing balance and accuracy, it's only fair to look at both sides of the coin. So the huge advantage is that you get a complete and systematic record of everything. This makes it way easier to spot errors and even fraud. On the other hand, all that detail is definitely more work. It can be more expensive to maintain, and let's be honest, it requires someone with specialized knowledge to get it right. So after more than 500 years, why is this system not just relevant, but actually essential? Let's get right to the main takeaway. If you remember just 3 things from this, make it these. First, every single transaction has two sides: a debit and a credit. Period. Second, because of this, it creates a complete and verifiable financial story of a business. And third, this very structure is the foundation that helps us prevent errors and fraud. It's like a built-in fact checker. And that leads us to a final, pretty big question. When you think about it, global trade, the stock markets, international finance, it's all built on trust and accuracy. So could our modern global economy even exist without this simple, elegant idea of balance? I hope this helped you understand the incredible power behind this system. If you found this explainer helpful, please do hit that like button, share it with your friends, and of course, subscribe to Cognito Key for more deep dives into fascinating topics. Thanks for watching.